We are going to cover Chapter 16 now, which is financial statements for a corporation that's a merchandising business. And we have prepared financial statements for a sole proprietorship that's a service business. And they did an income statement and a balance sheet. We're going to, in addition to do that, do a statement of stockholders' equity. And the income statement and balance sheet are very similar to a sole proprietorship, except there's one major difference on the income statement that we will talk about in this section, since income statement's what we're working on now. So preparing an income statement from a trial balance, if you recall, everything from income summary on down relates to the income statement. So most of our information that we're getting is coming from this worksheet or adjusted trial balance when we complete this income statement for Three Green Products, our corporation that's a merchandiser. So we're going to go through different slides for each section. The big sections are operating revenue. So it has a colon afterwards. Then the next section, the second one, is cost of merchandise sold. And then it's operating expenses. And those are the big sections. And then we just finished the trial balance. So we'll go through each of these. So starting with the operating revenue section. The operating revenue section, the thing that you need to know is that all revenue earned by the business from its normal operating business is called operating revenue. The amount of sales less the contra accounts being sales discounts and sales returns and allowances, is called net sales. So it's really gross sales less these contra accounts is equal to net sales, and net sales is what most people use when they're discussing their information and results with others. So what does it actually look like? So our heading is the same. It's who, what, when. So who is the company, what is income statement, and remember it's for the year ended. Then we're going to start with the operating revenue section with a colon all the way left justified. We're going to put any revenue account that we have. So sales is the only one we have. And then and that information comes again from the adjusted trial balance, less sales discounts, returns, and allowances, also from the adjusted trial balance. So these two amounts are sales discounts, sales returns. And then we add those two together and get 5589, and that's the amount that we're going to subtract sales less the total of 5589 to get to net sales of 626,781.99. And this next slide just kind of highlights that for you. The total of the adjacent column of the lesses is there. So that got us to net sales, and we have 100% out there on the percentage of net sales because this column, the component percentage, is always as a percent of net sales. So net sales as a percent of net sales is 100%. So the next section that we have is the COMS section, the cost of merchandise sold section. And the original price of all the merchandise that we sell during the period, the price we paid for it, is the cost of merchandise sold. You'll hear it called cost of goods sold or cost of sales as well, or see that in financial statements. So they use both of those. And then the operating revenue remaining after cost of merchandise sold is considered gross profit or gross profit on sales. So we're taking net sales minus cost of merchandise sold is equal to gross profit, and that gross profit relates just to the product and what the margin or income or profit is related to that product that we're in business to sell. By the way, you do have a lot of these handouts. I gave them to you at the beginning of the trimester. So let's go on to the hardest and the newest and the thing that's different on the income statement for a corporation. So cost of merchandise sold section of an income statement for a merchandising business. This is the section that we're working on right now. So we had operating revenue where we got to net sales. We're going to go minus cost of merchandise sold to get to gross profit, and we compute those percentages as a percent of sales. So we take 258 at 080, 255 divided by 626, 781.99, we'd get 41.2%. Take 368, 699.44 divided by 626, 781.99, we get 58.8. So let's talk about how we come up with this cost of merchandise section. So we take merchandise inventory. So the inventory that we have at the beginning of the period. This comes from the balance sheet, what we have in inventory. Then we made purchases. This comes from the adjusted trial balance. And then we take less the purchases discount and purchase return. So again, those are contra accounts. I add them together to get 2417, and I take purchases minus that total to get to net purchases, similar to net sales, right? Sales less the contra is net sales, purchases less the contra, net purchases. So I then take beginning inventory plus net purchases to get to my total cost of merchandise available for sale. That should make sense. I started with something, I purchased a lot, now I got a ton that was available to be sold. Then I'm going to subtract the merchandise inventory at the end of the year. So that's from the balance sheet or the adjusted trial balance number. So I had $360,000 available to sell. All I have right now is 102. So that difference has to be what got sold because I don't have it anymore. So $258,082. So that's the cost of my merchandise sold. So I take net sales minus that, and I get gross profit related to the product alone, 58% I'm making. So then, to complete the income statement, there are things called operating expenses. That's all our expenses that we incur in our normal form. So for rent and advertising, utilities, all those kinds of things. And then the revenue remaining after cost of merchandise sold and OPEX or operating expenses is income from operations, also known as operating income. So we were at gross profit there, and now we have operating expenses, and we list all of them from the adjusted trial balance, all expenses with the exception of federal income tax expense, which is going to be down here at the bottom. So make sure you note that in your handout. Federal income tax expense, not an operating expense. It is down here at the bottom. So I list all my expenses. I add them up to get total operating expenses. And then I take gross profit minus operating expenses is equal to income from operations. Then I do any other revenue or other expense. What I would note in my handout is that other revenue or expense is non-operating things. So if I borrow money and I'm paying interest, if I let other people borrow from me and do a note receivable, any interest related to that, interest on my savings, that's not revenue I'm in business for. That's not why I operate. It's weird stuff. So that's under other. So I had income of 102. I made some more other revenue. I add those together to get net income before federal income tax. less federal income tax expense, which I get from the adjusted trial balance. We did that last chapter, computing it to get my net income after FIT, federal income tax. All these percentages again are computed as a percent of net sales. And if I wanted to check myself, I could do gross profit minus the operating expense number should be 16.4. 16.4 minus 0.1 is, or plus 0.1 because it's revenue, is 16.5 minus the expense is 12.7. And I want to do a single ruling here. There was a single ruling there, single there, which means I'm adding things above it, and then a double ruling underneath the total net income after federal income tax. And then let's just quickly go over these things. What's the major difference between income statements for merchandising and service? It's the cost of merchandise sold section. Because in a service business, we don't have cost of merchandise sold. And then how is it calculated? Beginning plus purchases, and that should really say net purchases, equals total cost of merchandise available, less the ending is what the cost of merchandise sold is. And then why is interest income in a section by itself? It's because interest earned on notes receivable is not a normal operating activity. We're in business to sell products, not to earn interest on notes receivable. So that is an income statement for a merchandising business. And again, you don't have to memorize this whole format, but it should make logical sense to you. And most of the amounts that we use are coming from the adjusted trial balance. And this is what it looks like in its entirety. So it's pretty long, but it makes logical sense. And this net income number is really important to a lot of investors and lenders as well.